Hi, I'm Alexandra and I'm Chief Trust Officer at Mostly AI. Mostly AI enables you to create synthetic customers. But why would you need synthetic customers if you already have millions of real ones? And the answer to this question is simple, because synthetic customers solve one of the biggest challenges that banks are facing nowadays, which is balancing their need for AI and big data innovation with privacy protection. Just think about it. If you work in a bank and are in charge of digital transformation, or want to collaborate with a fintech, or simply get some training data to improve your fraud detection models, how incredibly time-consuming and difficult it is to get access to granular level customer data. Some believe that classic anonymization is a solution to this problem, since anonymous data is exempt from privacy regulations. But the problem is that classic anonymization has two fundamental flaws. Firstly, in order to protect privacy, it has to destroy information, which is bad if you want to do AI training or data analytics. Secondly, and this is even worse, despite destroying so much information, it's still easy to re-identify your customers. And research has demonstrated this over and over again. For example, of the hundreds of financial transactions that you collect per customer, only 3 are sufficient to re-identify over 80% of your customers. So this is clearly not anonymous data. And if you rely on these outdated anonymization techniques, you put your organization at financial, regulatory, and reputational risk. What we see as a consequence is that in most banks, customer data is strictly locked away. But how should you ever become data-driven and customer-centric if you can't freely collaborate on your most valuable resource, and neither share your customer data with all the creative minds within your organization, nor with external partners, like, for example, fintechs that you would like to collaborate with? To solve this problem, we at Mostly AI developed a game changer for big data anonymization, which allows you to do both. Retain all of the value and information in your data assets, while at the same time giving you full anonymization. So how exactly can we help you to embrace AI and big data innovation in compliance with CCPA, GDPR, and all the other privacy regulations? The solution is called synthetic data, and we have a platform that helps you to unlock your privacy-sensitive customer data in compliance with the privacy regulations. Synthetic data is artificially generated data that is as good as and as useful as your actual customer data, but completely anonymous. And therefore, it's exempt from privacy regulation and becomes free to share, free to use, and free to innovate with. How does this work? Our synthetic data platform leverages deep neural networks and various privacy guarantees, and it allows you to create highly accurate synthetic customers that replace your actual customer data. The process itself is simple. First, you upload your actual customer data. Then the training starts, where our powerful deep neural network automatically learns all of the structures, all of the correlations, and all of the time dependencies within your existing customer data. And then, once this training is completed, you can generate an unlimited amount of new synthetic customers, which have all the same correlations, all the same structures, all the same time dependencies, just as your original customers had. But as they're fully artificial and generated from scratch, they're anonymous and can be freely used. Let me show you how easy this is. First, you upload some data, as mentioned, and when I talk about uploading, this can either mean to our new SaaS offering, which we just launched here at Finovate today, or you can also have our solution as an enterprise offering directly on your secure premise, which means that we never got to touch or see your actual customer data. Today, we're working with the financial transaction dataset, so we have 2 tables here, one that has the account level information and one with all the financial transactions. Now we can click on Proceed. So today we're going to limit the number of subjects just to speed everything up for our demo a little. We will type in 1,800 subjects for both and then press Continue. Here we only make sure that our tables are linked correctly, but everything is automatically set, so we can press Continue. And now we are going to reduce the training epochs to 20 just to speed everything up and get everything done on time. You can see some other settings here that you can change if you want to tweak the training a little. But even if you don't change anything and use it completely out of the box, you will get stunning results. Now that we've changed it, we are ready to launch our run.
Cool. So how long does it take from here?
So this depends. Today we have a really small data set, so it will just take a few minutes. In production environments, our clients are working with data sets with millions of customers in their financial transactions. There it will take about a few hours to up to a business day, depending on the hardware you're having. And the benefit is that it's really, really fast, especially if you compare it with classic anonymization techniques. What we hear from banks is that it usually takes them between 3 to 8 months until they get a data set that they can, for example, share with a fintech, because they have to decide everything on a case-to-case basis. Here, it's a fully automated process, and once everything is set up, you can really speed things up. For our clients, we reduce the time to data by 90%. But I also want to show you our quality assurance report. We'll let the run a little and go to one that we already completed earlier today. There we can see the quality assurance report. So if you open it there and scroll down a little, once the training is completed, the generation process is completed, you see a last step that I didn't mention before, which is the analyzation of the data. Every time you use the software, an automatic quality assurance report gets generated, which allows you to see on a glance how accurate your data is and how well it protects the privacy of your customers. So if you open it, you get a PDF with an executive summary that we will see in a matter of seconds. Here it is. Oh, having some trouble with the zooming there, but soon we're going to be able to see it. So here we can see the executive summary of our quality assurance report. Next to the privacy tests on the right, we can see a big green check mark. And this is our sign that the synthetic data has passed all the privacy checks that are inbuilt, which ensures us that no individual customer level information gets leaked into the synthetic data. But what's also interesting is the accuracy of this data. Just in a matter of 5, 6, 7 minutes, we've reached an accuracy of 98.4%, which is incredibly high.
Cool. So tell me more about that accuracy and what does that tell us? And what are your customers using this data for?
Mm-hmm. So as mentioned, in just a few minutes, we got this accuracy, but actually our solution is the most accurate synthetic data platform on the market. So if you look in production environments and these huge data sets that I mentioned, what we see with clients is that they get accuracy of above 99%. And this means that you can use this data for everything you would love to use your actual customer data, but can't. For example, machine learning. You will get as good results if you train your machine learning algorithms on top of synthetic data as compared to your actual raw customer data. Sometimes the results will be even better.
Wait, even better?
Yes, especially when you look at cases like fraud detection, their machine learning models oftentimes struggle with rare cases, like you have millions of cases, but just a few of them are fraud cases. And with our generation tools, you can conditionally generate more data to balance out these data sets, which allows you to really improve the accuracy of your predictive models. What we've seen here with some studies we've been doing, that you can lift the predictive accuracy from 1 to 10%, which really is huge if you're into fraud detection. So this is really nice about the solution.
Cool. So what else can you use synthetic data for?
As mentioned, everything you want to use your actual customer data for but can't. One other top use case for our customers is definitely external data sharing. For example, collaborating with all the amazing fintechs that just demoed here at Finovate. What you can see on the environment is that you have this download synthetic data button. And if you press it, you can simply share this data with the startup or with the fintech you want to collaborate with without any privacy concerns. And what they will get is completely granular, completely representative customer data they can work with to develop new, unique offerings for your customer base. Besides sharing data, one of the big pains for banks, which we oftentimes hear, is testing. For testing everything properly, you need realistic granular data. And of course, you're not allowed to use your production data. And here, synthetic data can also really help. I once talked with somebody from a top 100 bank, and he told me that synthetic data for them will be the most important topic in the upcoming 5 to 8 years, just by solving this testing headache for them.
Awesome. Let's go ahead and wrap it up.
As I mentioned, everything you want to do with your actual customer data but can't, you can do with synthetic data without the privacy concerns. So what I want you to remember is no matter if you want to do AI training, big data analytics, or startup collaborations, with synthetic data, you can do it faster, cheaper, and without the privacy risks. So if you're interested to learn more, we're happy to welcome you at our booth later today, or just reach out to us via our website. Thank you very much.